Okay, we have up to 50 minutes for questions and discussion, and between the alternatives of having one question to one person answer, and just going around the room, I think maybe collecting questions in groups of about 3 and then having the panelists respond might kind of capture the benefits of the other alternatives. So I'm going to try to move all the way around the room and get a representative sampling of the people here. So this gentleman here can begin.
I wonder if I can ask a question that brings things to a very simple and immediate level for some of us, which is in municipal financing. And I speak as someone who's a non-economist and a non-attorney. And I'd like to ask whether and I speak as someone on a city council right up the road in Hartford, Connecticut, as you know, a very poor city, which is trying to dig itself out like other cities. One of the means of financing and trying to attract development is by giving tax assessment fixing agreements, always to attract developers by giving them tax breaks, usually at the expense of the ordinary folks in town who have to make up the tax income. I wonder if you can comment on that as a means whereby capitalists engender competition among states and cities for the sake of development. I mean, it's a common phenomenon. The other question I had to Bank is that one noxious habit to make up a budget deficit is to sell city assets. Time and again, in particular, what we're dealing with now in this particular city is selling tax liens. And your comments may be about the sale of liens on property rather than a direct lien sale through neighborhood forces, local forces, when they sell tax liens to an out-of-town corporation, which then collects 18% and so on and so forth. True parasitism, in my view. So I guess I'm looking for some help from experts in how in a city council, we can oppose that parasitism, and yet we need to balance the budget and so on and so forth. Can you comment on that? Tactics.
Yeah, let's get a few questions together. Let me stand up so that I can see the back. Okay.
My question is the current hypertrophy in the fire sector, or finance sector, an aberration, or is this an expected normal cyclical phase in normally operating capitalism?
Yes.
My question would be, why in the talks of the panel, not one panelist described the mechanism of bank as coming from the immoral fact that every private commercial bank creates our money out of nothing, out of loans. They do not get money from other depositors and lend that money. And that this fact has been hidden by Adam Smith and the capitalists, not focused on by Marx either.
Okay, I'll begin with the tax question. That's very important because it affects what are the reported profits. When Marx talked about profits, and anybody in the classical period talked about profits, what they really meant is cash flow, or what Wall Street accountants call EBITDA, earnings before interest, taxes, amortization, and depreciation. And that's because at the time they wrote, there wasn't an income tax, and you didn't have tax accountants expensing everything so that you don't have profit. You may remember what Leona Helmsley said, who was sort of the leading post-Marxist accounting economist. Rich people don't, or only the poor people pay taxes. Only the little people pay taxes. The objective of any accountant, if Standard Oil doesn't pay taxes, the real estate industry, if you look in the national product accounts under for the real estate sector, the real estate, since World War II, you find not only does it not pay taxes, it actually gets a tax loss write-off but for claiming that its buildings are losing money by over-depreciation, even while the buildings are soaring in price, according to the Federal Reserve flow of funds statistics. So the depiction of the economy in terms of profits makes it appear as if the rich people are somehow not making profits at all. They make capital gains. And they make capital gains basically by asset price inflation. The result of not paying taxes is, of course, that they create the urban crisis, which is the second part of that question, and the privatization, such as Chicago selling off its sidewalks to Goldman Sachs, the right to put parking meters on it, so that all of a sudden the price of downtown Chicago parking has gone way up. Of course, there's a good solution to cities having to privatize their property and sell off these toll booth rights for rentiers to put up toll booths. It's called the real estate tax. I mean, that was what was, there was no reason at all for Chicago or for New York not to tax the increased value of the real estate that's being inflated by debt. And they've been able to talk about parasitism taking over the brain. The banks have been able to trick the public into believing that if they raise the taxes on real estate, people will have to pay more. Actually, the reality is if you do not tax real estate, all this increased rental value from the public services that are provided, from the prosperity, and from the credit, all this rental value will be pledged to the banks for debt. So whatever the tax collector relinquishes ends up being paid to J.P. Morgan, Goldman Sachs, and the financial sector. So the solution, not only to avoid privatization, but to keeping down housing costs, to keeping down the financial overhead, is a tax system. The tax system and policy should be the way the anti-parasitic enzyme in the bloodstream to prevent what I've been talking about. The other question was whether this is a cycle. No, what we're going through now is not a cycle. It's the end, it's a phase change. It's the end of a process that has been occurring since the end of World War II. Every recovery since World War II has started from a higher and higher and higher debt level. So that now the debt level is so high that it's like trying to drive a car with the brake pressed right down against the floor. The brake is pressed so far down that there's no way of being able to expand the economy while you have to pay the overhang of mortgage debt, credit card debt, and student loans that is all blocking recovery. So what we are is in a debt deflation. And you could say that the debt deflation is the final cycle of asset price inflation. And that, by the way, is what my book, The Bubble and Beyond, is all about. But it's certainly not a cycle. The pretense is that it's all a cycle and we can get back to normal. What was normal was the ability of the parasite to take all of the growth of income for itself. And but now that there's no more income to take, you can't return to that normal because you're already taking everything you can. Time to kill the host and move on to a new one.
A couple of things. I'm not sure I agree on one point with Michael about whether it's cyclical or not, because there have been cycles wiped out. And that is something Marx talks about, is reinvigorating the economy. However, what's happened recently is rather than allow that elimination of debt to occur, as it normally does, we cut off the cycle with the bailout. So historically, it was cyclical, but I think we're in a period now where we've made it a permanent process. Now, with regard to taxes moving around, everybody knows where Mickey Mouse lives, right?
Say that louder.
Ireland. Ireland. And that's where Google, that's where Microsoft keep their intellectual property so they don't have to pay taxes. Now, companies that do have a physical presence, because the Google and Microsoft and Disney businesses are subsidiaries and they keep taxes differently. But with businesses, it's very common that a business says, I will move out unless, and then they extract. their pound of flesh. In the case of companies, it usually runs about $200,000 per job, per promised job, not per job, when companies agree to move into a new place. As companies don't come to some city and say, I'm going to build a factory here because I like the city. It's, I'll build a factory here. What will you give me? I'll create 2,000 jobs. And in many cases, the jobs never occur, but the tax benefits are there. When Walmart wants to build a store, it comes to the city and says, what we need, though, is a widened street. We need extra sewage. We need all these city services, but we're not going to pay for them because we're such a good company. You should be glad to have us. So what you see now is the share of taxes paid by corporations going way down. The share of taxes paid by individuals. Again, our economics professor Mitt Romney talked about that. The reason he apparently had only 2 years of taxes given was the third year was the year that they gave a get out of jail free card for people who took their money back into this country. And that would have hammered his chances of getting elected. So this question of tax, in companies like General Electric, their tax office is considered a profit center. It's not just a way of reducing taxes, it's a way of finding ways to get profits, that Michael was saying. And when what happens is we're told we have to shut down the post office, we have to shut down Medicare, we have to shut down Social Security, otherwise we cannot feed the monster.
Just very
You didn't answer my question.
and I'm not sure I will be able to do that either. But what I wanted to say is that maybe there wasn't enough truth in advertising. We call it the vampire squid something. Even though, and then also there is the term parasitic in the title of the panel, right? And apparently we are finding flaws in the metaphor or in the analogy. Yeah, I definitely find that analogy faulty. I guess that was kind of the point of my remarks, that I don't view finance as a parasite or as a vampire squid, superimposed on a body. I see finance as a limb or as an organ. It's a vital organ of the body of capitalism. So if you want to call the entire body the parasite, well, call it so, because indeed, capital grows at the expense of nature, at the expense of human life at the end of the day. So, and that is the first volume of Capital, which I believe supplies the essence of Marx's understanding of the entire phenomena of capitalism in all its complexity and all that. Volume 3 is really important. So just piggybacking on Michael's remarks, Volume 3 is really important. However, a lot of the focus on Volume 3 is on competition, is on the formation of profit, and the formation of the different forms of property income, right? How that surplus value, that additional amount of time that workers produce, but not for themselves, but for someone else, for the capitalists, how that booty is distributed, how it is allocated, how there is this fight over that booty, and that of course is essential, in understanding the manifestations of capitalism and how capitalism affects our lives directly and concretely. However, I think that the ultimate message is take a step back and see ultimately what is at stake here. And what is at stake, again, I should remark it, is, the essence of our humanity. The essence of our humanity, that's what it is this fragmentation of us, where part of our time, part of our mindful time is not for us. is for a power that is just grown and out of control and dominates us and makes our lives into a nightmare. And it's about it's about appropriating our entire focus time, our entire labor time, and not just the part that the capitalists decide to provide us with, to give us in the form of wages, salary, labor, income. So that's that. One point on one of the questions on whether the phenomenon is cyclical or not. I think that it has a lot of cyclical components. In fact, I will say just this much. In addition, if you look at the data, right? If you look at the data of the expansion of finance, right, or the financial sector in the national accounts, you will notice that this is not peculiar to finance alone. Non-financial services actually have experienced a more spectacular growth from the 1945 to the present. Healthcare, educational services, and all that. So ultimately what we're talking about here, right, and all of them, just like finance, they provide certain things that are essential for human life. Regardless of whether we organize our society along capitalist lines or not, there are certain things that are essential to our lives. Like, for example, we need to protect ourselves against hurricanes, right? It just turns out that in our society, that's an insurance industry that is in charge of doing that thing, right? So we have insurance contracts, insurance policies, etc., that are going to be traded in the financial markets, etc., right? But ultimately, what we have is us, right? So ultimately, if we're going to rebuild an area that has been devastated by a hurricane, it is about mobilizing us to do that job, right? And how we do it from a legal financial viewpoint is secondary, is subsidiary. So in response to your question, I will say I'm not an expert on those issues of municipal bonds and municipal finance and all that, on how to balance budgets and all that. And I understand the pitting municipalities against municipalities and all that to extract blood from us. I will say, ultimately, we don't have to become financial experts or legal experts to deal with these things. We just have to assert our human needs. We assert our human needs, right? Our basic human needs, and we organize and we fight, right? And then, we'll figure those things out as we go, right?
All right. Hold on, I'm just looking for all sorts of variety. Yes, first. Go ahead.
Yeah, so there's a couple of companies that are doing revolutionary things, right? Walmart, Amazon, Google. Amazon and Walmart, I'll put together. They're working right now logistically to optimize their profits in the form of getting rid of workers and using mechanical automation. Google right now, earlier in the week, they unveiled their self-driving car technology. So, get rid of taxi drivers, things like that. They also acquired a vast amount of robotics companies, and they're very, very close to getting rid of all fast food jobs. What else? You go to a movie theater, ticketers. Pretty much what I'm saying is, in the very, very near future, there's really going to be no jobs. So, people are talking about raising the minimum wage, this, that, and the other thing. And that's fine, but that's fine if you have a job. What's the world gonna look like in 5, 10, 12, 15 years when these companies that we've seen are incredibly good at maximizing profits by kind of taking advantage of their workers? What are we gonna see when that's really kind of like on steroids, if you know what I'm saying?
Yeah. Recently there was a book out called Rethinking Money by Bernard Lataire, in which he recounts a conversation he had with Paul Krugman about 10 years ago. And in it he says, in effect, Krugman told him, he said, "The one thing that I listened to from my MIT professors They told me, and I was very, very conscious to follow up on their advice. They told me, never touch the money issue. And if you read Krugman's columns recently and his debates with Steve Keen, it's clear that he did not touch the money issue. He does not understand the money issue. And I think that the economics profession as a whole has been, as Michael described with parasitism, I think they've been bitten and their brains have been anesthetized to the money issue. They are not capable, it seems, for the most part, to deal as economists with the money issue. The money issue, as the lady in the back whose question was not dealt with, is a very simple issue. Banks, private banks, create 97% of all money that comes into existence. It is only created when loans are taken out, so 97% of all money is debt. There's no, you don't have to be a brain surgeon to figure out why debt is overwhelming everyone, from individuals to nations. And there's no way out of it as long as money is created by private banks as debt. The solution, again, you don't have to be a brain surgeon. Take the power away from the private banks to create the money and return it to the people. I cannot understand and fathom why such intelligent people in the economics profession cannot see something that an ordinary person I could explain to in about 5 minutes and they get it. And I would hope that my question or statement would at least be addressed. Thank you.
That's for the panel. One more. Looking for people.
Thank you. On Parasites, the effects of U.S. government deficits versus those of surplus on this phenomenon of financialization. Theory A being that when there's a surplus, the absence of net financial assets forces people to borrow. Theory B saying that when there are deficits, all the new bonds and all the new reserves spur this financialization and enable banks to leverage. Or theory C is whatever you folks about.
Anywhere. Yes.
Okay. I'll begin with the latter question first. I remember how Bernard Lauterer told me that he went to school with Krugman. Obviously, Krugman's intelligent. Ron, you have to be very intelligent in order to be able to imagine an economy that works without any money or debt having anything to do with it. You have to be almost a genius to imagine how this whole system can work without debt, without money. What Krugman meant when he said, leave money analysis to the technocrats. And we all know who the technocrats are. The technocrats are who were put in charge of Greece after Papandreou was kicked out, ruling on behalf. The technocrats are the former officers of Goldman Sachs who are now running Italy, Greece, and the other Eurozone countries that can't pay their debts. So essentially, the idea, when I had to go to school 50 years ago at NYU, everybody was talking about Milton Friedman and the monetary theory that MV equals PT, that somehow money is like, the money supply is like air in a balloon. And here's the economy with a pattern of how it works imprinted on it, the balloon, and you're inflating it or you're deflating it, and it keeps the same shape, but it goes up or it goes down. It's very interesting that Friedman, who had this ridiculous theory that you really have to be very clever to have such a successful deception, such a successful error, that a generation of students is taught this nonsense. Friedman knew it was a lie. He dedicated his book on monetary theory to Simon Newcomb, who was a great American astronomer, who wrote a book on the Civil War financing of the greenbacks and debt. And Newcomb made it very clear that when he talked about the money supply going up, we all know what credit is given for. The credit and the money that is created is not to employ labor, it's not to buy goods and services, it's not to increase the price of commodities, it's to inflate asset prices. 80% of bank loans are mortgage loans. The effect is to increase the price of property and oblige new home buyers to go even deeper into debt to buy their homes. So, but if you're not allowed, if you have to now talk about an economy that only produces and consumes, there's no wealth. If you don't have, not only is there no money, you have to create a picture of an economy, a parallel universe in which there's no wealth, no money, no claims, and nobody owes anybody anything else. This is the image that Krugman does. That's why he's so applauded by the neoliberals. This man is the left. If he's the left, you need have no fear of any kind of a retort. So that's exactly what we're dealing with, that when people want to see the left view, they read Krugman. And Ron referred to the debate that Krugman had with Steve Keen. Usually Krugman just sort of denounces us all as a whole. He hardly ever mentions any of us from Kansas City, but because Steve is an Australian, he thought that maybe nobody would notice if he takes this poor Australian to criticize. Steve's PhD is in mathematics. A debate ensued where he absolutely was Bambi meets Goliath. If you all, any of you want to Google Steve Keen Krugman, you'll have a ball. We were all in Berlin a few years ago at an INET conference where Steve just the week after all of this to-do came out, and it was absolutely wonderful. I want to say something about what Julio said. He said that we all need education. That's essential. That healthcare is essential. But is it essential that we pay so much for education? Is it essential that education be privatized? Is it essential that healthcare be privatized? You can't justify the parasite by saying it's essential to let it make you pay more for what is essential. The parasite puts a toll booth in and says in order for the host economy to be fed, it has to go through us, and makes itself appear to be essential. There's no need for NYU to charge the highest student debt in the country. That was not the original idea of the land-grant colleges. These prices that people pay, the interest to the financial sector, the economic rent, all these are what the classical economists call economic rent. And not only is money and credit and debt excluded from the view of the economy, but economic rent, the concept of unearned income, is excluded. The other question was about technology, and there are two answers to that. Marx dealt with Ricardo's discussion that, well, look at all machinery, the power weaving is putting labor out of work. Marx pointed out that there can be no permanent technological crisis under capitalism. That is the essence of volumes 2 and 3 of his theories of surplus value. It was for this reason that the Communist Party broke into the printing company and destroyed the plates where the first English translation of Marx is to be printed, because the communists realized that to translate Marx means the end of Stalinist economics, the end of the Stalinist, and very soon Dobb in England came out with the international publishers' version of series of surplus value that was a travesty. So first of all, Marx said the capital goods making industries are going to be the major employers for what is unemployed. But then 100 years ago, every socialist and labor party in the world was talking about this technology problem. They all had the same response. Yet the result is going to be we can all live like Frenchmen live today with 35-hour weeks and public health. We'll have a life of leisure. Everybody, Simon Patton, all the others were talking about the leisure economy. If you have technology, there's no need for people to be employed at what was then a 60-hour week or now a 40-hour week. There's a simple solution to all of this, a change in the work schedule. That's what socialism was supposed to be all about. And the blaming our problems on technology or the fact that the old people are savers is simply could not succeed without the financial parasite deadening the brain of the host economy to resist this.
Okay. Go ahead.
I would like to talk about your question about work, and I partially agree with Michael, largely agree with Michael. Keynes had a wonderful essay called Economic Prospects for Our Grandchildren. And he says, yeah, you take care of that by shortening the working day, which is what Michael's talking about. But on the other hand, there's a difference between jobs and work. There's lots of work to be done, whether it's in education, healthcare, environmental remediation. The problem is that capitalists do not hire people for that kind of jobs because it's difficult as a profit-making exercise. That is, it's hard to see how you could start a company that would work on environmental remediation unless you own the property that's being fixed up. So there's work to be done, and what we have to do is develop a political system so that we can use our work to get done what's needed to be done instead of to hire our mathematicians and physicists to do better algorithms for beating the stock market. Yeah, there's a lot of work to do, and it's a very important question. What's interesting now is that very conventional economists are coming to this point and saying technology is going to be undoing us. There's a MIT economist with an unpronounceable Icelandic name. That should be illegal, Icelandic names. But anyway, he used the example of Instagram, which started with 12 employees, and Eastman Kodak, which had several 100,000. And you have Instagram and applications like that doing the same work that Eastman Kodak was doing. And there's so many jobs that can be digitized that can destroy the job market as it's presently constituted. That's the problem, as it's presently constituted.
So I guess pushing us in certain directions even against our own will. And so it's something that, you know, it's obviously mastering technology, turning technology into a servant of our needs. It's precisely what socialism is about. The struggle for socialism is the struggle to appropriate our powers that have been hijacked from us, right? So that's the main message that I take from Marx, and I keep repeating it. So when Walmart is doing this, I think, amazing things, you know, in terms of, you know, coordination, organization, deployment of, you know, resources across the globe, right? I mean, like putting together, you know, pieces that are all scattered around the world, right, and connecting them and making them flow. That, you know, that reminds me of the socialist calculation debate, you know, in the early mid 20th century. You know, there was this debate. Friedrich von Hayek was one of the proponents of the idea that socialism was unworkable. It's impossible to do so many calculations at once, right? Even if we had like powerful computers, we wouldn't be able to coordinate and to match the resources that we have and the needs that we have in order to, you know, meet those needs with those resources. That's such a complex thing that it will completely overwhelm us. And so as a result, we have to rely on markets. That means we have to just act like little ants and, you know, and just take information around us and then take actions that may or may not gel globally, right? So as a result, we may destroy the planet, but at least we are free and we are independent and blah, 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 you know? Well, it turns out that, you know, that somebody like the Waltons, which by the way are not in, well, what they do is has to do with finance, but, you know, but their main business is wholesale and retail trade, right? So they are, you know, among the top richest people in the world. You know, actually, if you look at the Forbes billionaires list, you will see that finance people are not the top ones. You know, it's Bill Gates, is telecommunications guy Carlos Slim in Mexico, those kind of people, and then you have Bloomberg and all that, but they are like down here, and you know, Bloomberg, by the way, is more like information rather than finance. But back to the story about the calculation debate, right? So I think that somebody like Walton would say, just, you know, you think that matching resources and needs at this complex global scale is impossible? Just wait and watch. I'll do it. You know, I'll show you how that can be done. You know, so in one part of me thinks, you know, when Google is doing all these things, I'm hoping, right, because of course it depends on whether we take action or not, but my hopeful, my aspiration here is, okay, let Google do that. We will take them over. We will appropriate them. We will expropriate them. And we will make Google, maybe we will rebrand it or rename it, right? But we will make it serve our needs rather than be a profit-making machine for the few. Money. I can see the point of Paul Krugman avoiding the topic. I teach money and banking, at undergrad students, and the way I try to explain this to my students, right? Because instead of quoting Marx and all that, it's like this. In principle, when we people create society, when we form society, we help each other. Right, that's what we do. It's called cooperation, right? Marx calls that labor cooperation, but it basically means I help you, you help me. Helping and being helped, that's all we humans are good for. Well, that and the opposite, right? Which is conflict and, dissolving our social fabric, right? But so if we are forming society, we are making society, we have to help one another. And so it just turns out that in our society, the way we help one another is because we are private owners, so I will help you, but I will also be helped in according to certain proportions that we call prices. So I scratch your back, you scratch my back, but the proportion at which this back scratching takes place is regulated by the whims of the market, which means all of us together buying and selling back scratching, right? So, when we are trading, what we are doing is we are exchanging bonds, right? That means claims of ownership over stuff, over things, right? And these are securities, right? It goes from a simple receipt that demonstrates that you are the owner of that bottle of water, and therefore you are legally entitled to disposing of it within certain confines that are set by society and by, of course, the laws of nature. But so money is just a particular type of bond. Money is just a particular type of legal claim over wealth that we traffic, that we trade in the markets. And so, in principle, nothing prevents me from issuing bonds, right? The problem is, will I be able to sell them? In other words, will I be able to borrow from you? Well, I don't know, because you don't know me, right? But, even like Barnes & Noble issues these cards, gift cards, and a lot of people pay for them and then they forget about them and they are never redeemed, right? So that's actually Senior Ash, right? That Barnes & Noble is pocketing, right? So then the issue is what makes certain bonds acceptable. And so the moneyness of money has to do with the acceptability of bonds, right? And I will leave it at that.
If we have time for another round.
You just spoke. You mentioned taking action against these. Nothing will happen unless we take action. What actions can be taken? What would you suggest? What have you thought of? What have you thought of as actions against huge companies like Google?
It depends on where we are, right? We all have needs that are not being met by the system, by our society, by this collective aggregation of individuals, right? And the interactions that we do with one another. Our government, our local government, our federal government, there are a bunch of needs that are not being met, right? So we are not happy with our lives, and in part is because the rest of society is not cooperating with us, right? So what we need to do is in the first place recognize those needs. In the second place, recognize that there are many people, the majority, the 99%, who share those or similar needs, and we have to join forces with them, and then try to make all this social structure that we create, that we call governments, markets, whatever, the economy, right? All of this technology, all of these things, try to make them serve those needs, and that requires struggles that are, as they used to call them, economic in nature. I mean, like workers demanding that their working conditions are better, that their wages are better, that are higher, and so for that they need to organize unions, etc. right? Or, you know, we are sick and the insurance, or we don't have insurance, and so we demand healthcare publicly provided, etc. Right? The needs are specific to individuals, but then when we start to struggle for you know, meeting those needs, we realize that there are many other people who share them or very similar needs. And then there is the issue of how do we coordinate, you know, these struggles and all that. And so that's what I'm talking about. So I cannot like specifically refer to, you know, your case, because I don't know where you are located, what are your particular issues, but I'm pretty sure that we have a 20-minute conversation, we will find points of coincidence.
Let's get to a round of questions. I'm looking for hands. Okay, back, gentlemen. Yes.
The EU recently passed a financial transaction tax, and since we're kind of talking about the great vampire squid, some people on the left have kind of praised it as a measure that would effectively stop high-frequency trading, because it's usually based on kind of really marginal profits, 0.2, 0.5% profits, and a financial transaction tax might kind of take away the incentive to do that. Do you see the financial transaction tax as kind of like a half measure that doesn't actually transform the fundamental nature of finance and the way that it parasitizes the economic system? Or do you think that it actually has real potential, if passed in America, to change the nature and the way capital acts with finance?
A couple more, and then that'll probably do it. Yes.
I haven't had a chance to get through Piketty's book. It's fairly large. He traces a couple hundred years of global inequality under capitalism and the problem of inflation of assets and whatnot. I'm wondering if you have any insight or can tie that to our current context of those implications to parasitic finance.
Okay, one more.
Does anybody have any faith that we actually might have some allies in the financial community who may want to do a little Trojan horse action from the inside, or is all hope lost, or are they beyond redemption?
Okay, I think I'm going to leave it for the panel for some final comments, and then we can talk informally. Who would like to?
Okay, go ahead. I didn't hear some of the questions.
Well,
I did hear the financial transactions tax.
Okay.
Take that one.
The financial transactions tax makes a lot of sense. It's an easy thing. It doesn't really hurt anybody in need, and it could raise quite a bit of money, and it might make the type of efforts going into making these minute profits off of transactions that could take a millisecond, I think it could have some good effects. I don't know of any negative effects of the Financial Transaction Act. She asked about what we can do. I mean, I don't know how many people come to the left forum. Most of us have fairly similar ideas. Why the hell can't we somehow work something out? Whereas so much on the left ends up becoming factionalized. I remember when I was in college during the 60s, everybody wanted to be this leading radical group, and everybody else was supposed to follow, and nobody wanted to listen. Listening is very important. Communicating is very important, like Julio says. And then we get a hell of a lot done. And there are organizations, there are movements that have been tremendously successful. You mentioned Walmart before. During the populist movement, there were farmers that were organizing these very complicated networks of production and distribution outside of capitalism. So, yeah, there's a lot we can be doing, and it's, I don't know, maybe the toxic stuff from the predator reached our brains.
Well, on Piketty, wait for my editorial perspectives. There's going to be like an editorial note on Science and Society at some point. So I'm plugging that.
I'm turning
but-
my platform over to Julio for one issue.
Okay, I'll make a comment on Piketty on the proposals that he makes, right? About the global tax on wealth, global tax on wealth, anything that taxes wealth or taxes the income from wealth, income from capital, right? Profits under any form. I'm for. Yes, tax them and then use those resources, for the 99%. Absolutely, I'm all for that. Now the problem of course is the implementation of that, right? And so he is looking at this from a kind of an abstract general point of view, but it's not a technocratic issue. It's not something that you can decide technocratically. It's something that has to be fought for. And then in the fight for that, and that is kind of a similar criticism that I have for the post-Keynesians. I agree on part of their political platform. We want spending, we want effective demand to shift, etc. All that I'm for. The problem is how you accomplish that, and then by accomplishing that, then actually it turns out that in order for the capitalists to accept such a drastic change in legislation, right? Number one, the coordination, right? To make it a stick as a global tax, right? That's a nightmare, right? Politically speaking, that's a nightmare. Okay, accomplishing that for the richest countries in the world, that's a little bit more doable, but it's still a very high call. But so in developing the strength to accomplish something like that is where I see the merit of this demands, of these slogans, tax the wealthy, absolutely. But because ultimately, if a tax like that, if a fiscal change of that magnitude is going to be implemented, it's going to require a tremendous amount of fighting, right? Tremendous amount of fighting, and so if people develop if they are capable of asserting themselves, right, and noticing that they can actually reshape legislation and impose a tax on the rich, then probably people are going to want more than that, right? So I guess the best, and this is another commercial for David Laitman, the best explanation I've read about, how to look at reforms and the movement for a radical change, for the overthrowing capitalism and replacing it with something better is an editorial perspective that he wrote like a couple of years ago, right? If you Google editorial perspectives, David Laitman, reforms revolution, something like that, you will get it. It's in a PDF, it's for free online.
Well, if we're doing commercials, it will be in my forthcoming book, which is called Passion and Patient, Essays on Social Change.
There you go.
And
just one little thing about the Trojan horse. Bankers are just like us, but doing banking, and some of them are rich, right? But they are human beings. So is it possible that some of them may be, I think of this tiny minority that may be motivated to work for us, and if they are there and they are doing that kind of work, I'm for it, absolutely. Yes.
Okay, I think we'll wrap up with a couple more commercials. First of all, Science and Society, one of the journals that Julia and I participate in editing in, which co-sponsored this session, and there's a lot about finance and many similar topics covered there all the time. Please check it out on the web. Please look for us downstairs in the literature area, and think about subscribing. Print journals, which have an online presence also, are still important. Science and Society. Science and Society. And finally, the Union for Radical Political Economics. If you are a radical political economist or someone interested in radical political economics without any particular affiliation, it's a 45, 50-year-old from
1968
organization. We're approaching our semi-centennial or whatever that is. And it's going strong, and it's very important, and it's very respected in economics and in political activism, and you should check URPE, U-R-P-E, Union for Radical Political Economics out also. Get some literature and maybe think of joining. And with that, I'll call this one to an end. Keep discussing.